Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I was talking to a friend of mine last night. We were watching football. I hope you love football, by the way. I hope you're enjoying the World Cup. Tonight is the final of the World Cup, which will be absolutely amazing game, hopefully. If you love football, I'm talking about football, not the soccer thing, right? You guys Americans call whatever. I'm talking about soccer. I'm not talking about American football. So yeah, if you love football, put the like the video, comment down below what team you support and who you were rooting for up until now. I know there's only two teams left, but yeah, I was talking to a friend of mine last night. We just during the football, and he said, you know what, he wants to buy in property in the UK, and he's got a bit of cash right now. He wants to invest it, but right now, obviously, things are still expensive. So he's waiting for hopefully the market to drop maybe in the next couple of months, 6 months or so. But he was like, you know what, for the meantime, what do I do with this money? Because maybe I should invest. First of all, I said to him, obviously, you should invest the money that you need in the next 12 months or if not longer. Okay. Because if you need that money and you're down quite a bit, then you're not going to be able to take that money out. First of all, that's my first advice. Second advice is make sure you've got your emergency fund and all that stuff. But I said to him, listen, if you are looking for, I said to him, what do you want to do? Do you want to invest in the stock market? And he's like, yeah, I'm looking into it. But you know what? I've been doing quite a bit of research, so I'm not sure whether I should buy ETFs or individual stocks. So anyway, long story short, I said to him, basically said to me, if I invested, say for example, £10,000, what will be my return if I put into an ETF or if I put into individual stock? And that kind of got me thinking. So straight away I started planning this video last night, straight after the football, because what I thought will be really good is to look at some of the ETFs that we've spoken about so far in this channel and find out if we had invested £10,000 on each an individual ETF that we've talked about so far, what will be my return in 1 year, in 5 years? And that's what we're going to do today. So today we're going to look at three different ETFs, the iShares ETFs, and see how much our return will be based on £10,000, how much we will actually make 1 year and how much we will make in 5 years, whether we are down, whether we are up, and what basically the situation is, right? So yeah, let's do that first. But if you have not liked the video already, please give it a like. It takes a lot of time and effort to put these videos together. I would really appreciate. So yeah, today is a little bit of fun video just to see how much actually we will make based on these ETFs. Because remember, picking individual stocks is great, but it also is a headache, because when you have companies like VF Corporations who's down quite a bit and is now giving me headache I can't get rid of a stock that's basically down almost to 40 something percent, but I genuinely want to get rid of it. So it's becoming difficult at times. So would it be better than to have that money, almost that £2,000 I put into this company, into an ETF and can completely forget about it? Okay, completely forget about it, right? So let's have a look at in terms of total return against the S&P 500, where these ETFs right now are year to date. So a year to date, as you can see, the S&P 500 is down to almost to 20%, right? So what I want to see now is based on these ETFs, all three of them. So you've got the US version, the world version, and what emerging markets. So the three ETFs are here from iShares. And as you can see, the S&P 500 is almost down 20%. But the US version of these ETFs is actually down only 2%. So it's definitely beating the overall market. And when it comes to the world version, it's about 4% down. So that's also beating it. But the emerging markets is actually worse than the S&P 500 right now, if we speak. Okay, so 26% down right now. So yeah, it's quite interesting, because the S&P 500, I think the top 10 companies are your Teslas, your Nvidias, your Apples, Microsoft, Google, Amazon, the big boys, right? And they are down very much, a lot this year, basically. But when you look at these ETFs, the top 10 are more or less consumer staples, more energy. There's a lot of energy companies in there. That's actually helped a lot these ETFs. A lot of them you will see in a second will be the ETFs that we've the energy sector that's actually outperformed completely the market in 2022. So now what I want to show you is if you had invested £10,000 into each $10,000 if it into each one of these ETFs, how much you would have made after 1 year and then after 5 years. So the things that we're looking at is the expense ratio. That's how much you will pay for this company to manage these ETFs. Because remember, these ETFs actually have to be managed. They have to basically every quarter they have to rebalance it and so on, right? So you are paying for a small amount of money for that. Then we look at the dividend yield. So if they have a dividend, how much their dividend is, the year it started, how much money that's in this ETF, so how much money that is being put into these ETFs and so on, the number of holdings for each ETF, the year-to-date return in percentage, a year-to-date return in dollars, 5 years, and then 5 years. So 5-year percentage and 5 years in dollars, as well as if you live in the UK, I want to see if these ETFs will allow you to buy in an ISA account, and if you are doing basically a SIP, which is basically self-invested personal pension. So you are investing your own pensions rather than actually giving it to a company, right? And then if it's registered location, so what countries actually can you potentially buy these ETFs? So if you have a brokerage in your own country in Europe and so on, will they offer this ETF? Okay, and obviously if they do offer, then you can look into and do a bit more research. So let's have a look at the first one. And the first one is the one I actually own in my portfolio, and that is the world version. Okay, so they have 0.30, okay, that percentage of expense ratio. So which is quite small, but not as small as the, for example, the Vanguard, which is like 0.0 something, right? But again, it used to be 0.5, so it's better than that. So it's now way cheaper than that. Dividend yield 1.93, which is quite nice. They started in 2007, just before the basically crash of 2008. So it's interesting to see actually that it's just started around that time and it's still around after this many years, which is quite good to see. And this is how much money that's basically right now invested in these ETFs. So almost $400 million has been invested into this ETF so far. They have 354 different stocks in that ETF. And this is the beauty of having an ETF, because if one of these companies do not do well, they get rid of them and replace them with another one. That's why you're paying the management fee, right? And it's less risky. If VF Corporation completely goes out of business today, I will be losing about £2,000. That's quite a bit of money for me, to be honest with you, right? But if something happens to the ETFs, just get rid of that ETF, that company, and replace it with another company. So the risk is actually way smaller than what you would have done in a normal stock. The other thing I love about ETF is that you buy it, you hold it, you add to it, you forget about it. You don't have to do much of a research. They doing the research for you, the company that manages it. Okay, so if they are, for example, if they rebalancing wise, if the energy sector is all of a sudden doing way better than whatever, and that energy sector becomes, I don't know, 10-20% of the overall ETF, they have to sell some energy and buy other sectors. Why do they do that? Because they want to rebalance it. They want to make sure that it's actually stays within the allocated whatever. So if there was 10% for each sector, that's probably what they would do. So it's a way less riskier than actually buying individual stocks, right? The next one is the year to date. So you're looking at right now a year to date return percentage wise. If you had invested £10,000 into this ETF, right now you would be down 10%. Okay, you'll be down 10%, and that is in total return right now. Your total money after your £10,000 that you invested, you would have had right now $8,936. Okay, that is your total so far out of the 10,000 that you've invested. So considering what's happened in the overall market, that's not really bad. And if you are a long-term investor, you wouldn't care. Why? Because look at the long term. If you had invested this 5 years ago, your total return right now would have been 31%, almost 32%. 5 years return would have been in dollars $13,182.66. That's your total return. So this is why I've always said to you guys, don't look at just a 1 year fluctuation of prices and things like that. Think about the long term. And if this ETF is something you love and want to hold on to, then don't sell it because it went down 10% this year. Look into the long term horizon. So if you've got 10, 20 years basically time horizon, then look into the next 5 years, the next 5 years, and then 5 years after that. Okay, so the next 15 to 20 years if you like, right? So 5 years, you would have made 32%, which is $13,182. So that's not bad. That is actually quite good for £10,000 dollars invested. In 5 years, you're up quite a bit. And you can buy this ETF in ISA or SIP, basically in the UK. You can buy in the UK, UAE, Belgium, France, Germany, and a lot of other countries. I'll show you in a second some of the countries. So there are quite a few countries that basically offer this. So if you live in another country, in Europe and so on, have a look at your brokerage account and see if they actually offer this. The next ETF is the US version. This is the one I used to own, and I sold it because, and I'll show you why I sold it in a second. So they have the same expense ratio, 1.43 dividend yield. They start in 2007 together. Okay, they have 148 million. Okay, so slightly almost half of this as well. Okay, so this is only US stocks, whereas this one is basically all around the world. Okay, so they have a lot of companies in different countries, whereas this one is just based in the US, only US stocks, and it's 119 different companies in there. You will be down 10%, which is very similar to this. So these two track basically almost identical in terms of their total returns. 8,994, you'll be down 10%. 5 years though, you would have been actually up 43%, or that's 14,345. So as you can see here, you would have had better returns because of obviously the US markets have done better in the last 5 years than maybe some of the companies in this ETF. So, but overall, you would have made $14,345 from that 10,000 investment that you started with. So it's very important that you look into the long term and don't worry about what's happening right now. Yes, you can buy in ISA or SIP if you like, and they have both basically are available in the same countries. The final thing is the emerging markets one. This one it has a slightly higher expense ratio. It has a 2% dividend yield. It started around the same time. It's 139 million in asset under management. Okay, they have 330 different companies in there, and right now it's down almost to 22%. So it's way basically lower. So that 10,000 you would have had $7,824 right now. So you'll be down quite a bit, almost to 22%. But look at the 5 years growth. This is what surprised me the most. In the last 5 years, you would have made about just 1%, literally $99. That's how much you would have made. So that's not good at all. So this is one of the reasons I used to own it for a few weeks, I think, and then I realized this is not great, so I sold it straight away. And ISA and the SIP, you can buy it, and then you can buy it in Belgium and other countries. So what I'm trying to do here is just show you, if you buy individual stocks, there's a lot of risky. Okay, there's a lot of risk involved in this buying in these things. But if you buy in this ETF, and you can see here, there's 354 different companies in this ETF. Whether it goes down, right now I'm up just 1%. Okay, but overall market is down. I've got companies like Medtronics that I'm down 17%. I don't know, 18%. Okay, I'm down quite a bit in some of these companies, right? But this ETF is still up, despite the markets that we've had. We have had some crazy markets this year, but I'm down. But at the same time, while I'm actually down and waiting, I'm still getting paid dividends. So I think 23 shares I had at the time, okay, when it went to ex-dividend, they paid me about £8, which is quite nice. Okay, before that, I think I got £5 or something like that a while back. Where is it? There we go, £5. So overall this year, they have paid me about £13-14 for holding these basically. I think at the beginning it was I only had 15 shares, but right now I've got 23.5 shares. So the moral of the story is, if you are interested in ETFs, it's probably better for you if you don't have the time to do the research, if you don't understand what's happening in the markets and so on. It might be easier bet to just, you know what, park your money in there, leave it for another 5 something years. Again, I'm not definitely financial advisor, so you definitely do your own research. But what I will definitely say to anyone that is new to the market, start with an ETF first. Maybe start with both of them if you like. Let me quickly show you before I finish the video. I'm going to share with you guys so this is the emerging markets, the top 10 companies. And those top 10 companies include, okay, Samsung, for example, and a couple of other companies that I've never even heard of. So that's probably why it's a 34, almost 35% actually comes from these top 10 companies. When we look at the world one, okay, and this is one of the reasons I've actually sold the other one, I'll show you in a second. 10% comes from Microsoft. They've actually, oh wow, do you know what, I actually didn't see this. I actually haven't even looked at this. So they've now rebalanced it, and you can see 10% is now Microsoft, then it's Tesla, then J&J, right? Because it used to be Chevron and Exxon actually were quite high up. Now J&J was 10%. But now it's Microsoft, because Microsoft is cheaper. This is why I actually do like this ETF. And you know what? I honestly, Wallah al-Azim, I actually didn't even look at the holdings. I assumed it was as what it was before. But every November, they do rebalance it. So that's probably what's happened. I'm going to dig deep, actually look into this bit more, inshallah, in the next couple of days. But there you go. It's actually changed now. Because what I was about to point out was, and I think I was, okay, I'm still right. Look, this. So what I was about to point out is the top 10 of these two ETFs. So the world and the US, right? It's almost the same. And as you can see now, Microsoft, Tesla, J&J, Exxon, the same thing. Procter & Gamble, Chevron, Pfizer, the same thing. Merck, and then cash, and then something else. So Merck, Cisco, and Danaher corporations. So 20% of Microsoft. That is crazy. They definitely know Microsoft is down quite a bit. Tesla is just about 5%. So they've added a bit of growth to it, which is quite nice. Okay, honestly, this is I'm surprisingly surprised, if that's even a word. So yeah, it is really good. I'm quite happy they've done this, right? I'm really happy they've done this. But 10%, I'm comfortable. So this is the one I have in my portfolio. 10% Microsoft is actually okay. Tesla 3 something%. Recently I was thinking to buy Tesla, but now it's in here. I might actually add more money into this ETF and just leave it there. And J&J is just 3%. The rest of them very much balanced. But I hate the fact that they sometimes do these things where they add 10% of one stock, 20% of one stock now. So if I was to own both of them right now, that would be, for the two ETFs, will be basically 30% of Microsoft. And I already own, I think, about 5% of Microsoft in my own portfolio. So almost 5%. But yeah, there you have it. So I'm actually quite surprised. I'm going to check what else is changed in terms of that. But the data has not changed. It's just they rebalanced it, and it actually looks really good. So these are the 3 that you could potentially add to your portfolio. That looks really all right so far. And yeah, this video is actually longer than I wanted it to be, but I'm really shocked and actually happy that they've done this. But it would have been nicer if that was 5% rather than 10%. And if that was the 5%, whatever, it would have been easier. But look, Samsung here, 12% for the emerging markets one. So yeah, there you have it. Three different ETFs. Hope you enjoyed the video. If you are still here, give me a like and have a wonderful day. Assalamu alaikum. By the way, before we move on, actually, I'm going to do the same thing. Sorry. I'm going to do the same thing for the US versions of these ETFs as well. Not the US versions, but US, the halal ones, the SPUS and so on. I started doing the research, so I will be doing that as well in the next couple of days. Assalamu alaikum.